Okay, trend. So what is trend? Trend is when you see prices moving up or moving down or moving across over a period of time. It's said to have formed a trend. So if you see prices moving up consecutively over any period of time, you say, hey, it's trending up. Or if you see prices moving down over a period of time, you say it's trending down. If you see prices not moving up and then moving back down and then moving up and then moving back down, you say it's moving across. So remember, when you describe trend, you can describe it as moving up, moving down, or moving across. And then also remember that when you describe trend, you want to describe it as a long-term, medium-term, or short-term trend. A trend could be moving up in the long term, but in the short term, it's actually moving down. So that's how you explain trend put together. It's not always one answer. You're going to have the period, which is the long, medium, and short. You're going to have the direction, whether it's up, down, or across. I know one of the questions you're going to have right now is what's considered long, what's considered medium, what is considered short. I will answer that a little bit later. The main thing is you need to understand that prices in the market do not move in a straight line. Prices in the market will move up and down in a zigzag formation. Okay, so why they do this is because at any point in time in the market, at any price, there is always a lot of buyers and sellers. If there are more buyers and sellers, price will go up because demand is higher than supply. If there are more sellers than buyers, then you see price drop. Okay, so the reason why we see how price moves not in a straight line upwards or downwards is because at different prices, people think differently. At different prices, there might be people who will be looking to buy more at a price or looking to sell more. So you see prices move up and down in a trend, in a trending formation. Trend is super, super important. You can trade in an uptrend, you can trade in a downtrend, you can trade when it's moving across, but I'd always say that for anybody who is starting off with their trades, you want to trade with the trend. If you can trade with the trend, you'll be taking on a lot lower risk. After all, 70%, roughly 70% of price movement will follow the trend. Trading against the trend, or what we call counter trend, will be a lot higher risk because only 30%, about 30% of counter trend trades succeed, or counter trend trades move according to what it's supposed to do. So you'll see that you put more effort into a 70% success rate or 30% success rate. It will be a higher risk when you go counter trend. A higher risk could also mean a higher reward, but are you able to sustain the risk it takes for that 30% success rate? I would really recommend that you start off with trading the trend. If you see it going up, look to buy, look to buy, look to buy. If you see it going down, look to sell, look to sell, look to sell. This is actually a really simple slide, but I actually spend a lot more time on this because I'm trying to break you out of your mindset where a lot of people will be looking at a market going up and they say, oh, it looks like it's going to turn down. It should turn down here. At this point, it's too high. It needs to turn down. And they start selling, they start selling, they start selling. If you're selling into an uptrend, it means you're taking on a lot of risk. You could make money, but you are making money in a very high risk situation. What I'd rather do is look for it to go up and keep buying, closing our trade, buy, make money, close out, buy, make money, close out. Follow the trend. After all, they do say the trend is your friend. You just need to know when it ends, which I have tools and ways to guide you through that as well. So how do you tell trend? How do you tell trend? Several ways. You can use the moving average. So you see the red line down there, that's the moving average. We call it simple moving average. It basically takes the average movement over a period of time. It calculates the average movement over the period of time from the candles. But you also notice that it's a bit slow. Big moves upwards or downwards can very drastically change the moving average. And also you only see the moving average start turning up after prices has gone up. So you can use moving average as a way to identify the overall trend, but do take note that it's slightly late. Another way, more common way that people will look into identifying trends is by identifying lower highs or higher lows, consecutive lower highs and higher lows, to tell them whether prices are moving up or down. Okay, identifying consecutive turning points. How do you tell a turning point? Points should look a bit more V-shaped. So you see that at this point it's gone down, hit this level and bounce up, come down, hit this level and turn back down again. This will be a lower low, this will be a lower high, and this low compared to this point is lower. Okay, the other problem a lot of times is everyone starts picking points which are not turning points. Comes back to that idea where markets will not move in a straight line. It's always going to zigzag. So you don't want to be identifying points just because it's moved a little bit. You want to be identifying V shapes, big bounces as your lower lows or your lower highs, or your higher lows and your higher highs. The way that I prefer to look at trend is to use trend lines. Okay, I don't actually draw the trend lines on my charts. I actually visualize the trend lines. It's the lines of best fit where you have diagonal lines drawn, touching or either close to the most number of turning points. You'll see here that I have those lines pointing downwards. You don't have to draw those lines to actually see it heading down. Why I don't actually draw those lines? Because one of the common problems when you come to drawing trend lines is that you draw too many lines. You draw too many lines. You try and touch every turning point. You start having lines at every angle. Remember that trading, the art of trading, you need to look at it as a broad overview. You need to have it a bit rough and ready. Something that indicates the trend is going to be good enough. You don't have the trend lines to touch every point. At this point, things you need to take note of. I look at trend on the day 1, D1, or the H4, the 4-hourly chart. I would avoid looking at trend in the M1, M5, M15 because it doesn't tell you too much. I would avoid looking at it on the monthly, weekly charts because it tells you too much. Another thing you want to take note of is avoid zooming out too much. Looking at this picture here, you can't even tell whether the candlestick is a black candle or a white candle. It's just a line. This is the most updated chart right now. This is the US yen on a daily time frame. And if you're looking at prices back in 2018, August of 2018, you have too much information. You will not be able to tell trend effectively, or you're getting too much information. You say, hey, it's going up and then down and then up and then down and then up and then down again. Too much information is only going to confuse you. too little information is also going to confuse you. Again, H4 and day one, this is the US yen on the H4 time frame. If you zoom in too much, this is the maximum zoom in that you can do on a chart. If you zoomed in too much, at this point now, I'm only looking at 1 week's information. It's too little. You have too little a view. At this point, looking at the US yen on the H4 time frame, you would think, oh, it's an uptrend. I'm only looking to buy. But you would have missed out a lot of moves over the periods, over the past couple of periods. So how should you be looking at trend? I look at on H4 time frame. I do it on the H1 for the currency calls, but I look at it on the H4 time frame, the H4 charts. This is my usual view of a chart. H4 time frame with about 10 weeks worth of information. How you count 10 weeks? Between the dotted lines. Between the dotted lines here and here, that's 1 week. So it's about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. From a 10-week view, I'm able to identify both the long term, the medium term, and also the short term trend of the chart. For example, right now, I would say that in the short term, it's been moving across because it's been moving across over the past couple of days. I would say in the medium term, it's probably gone up a little bit, or the medium term has been going up a bit. In the longer term, it's actually been coming down. In the longer term, it's actually been coming down. In the extra long term, it's been going down over a very long period of time, since July. So that's H4 on a 10-week information chart. But at this view, a lot of you might not be comfortable with this view because you might feel that your candles are a little bit too small. So you can also view it on the H4 time frame with about 5-week view. 5 weeks worth of information. 1, 2, 3, 4, 5. It still gives you the same kind of view. Short term, moving across. Medium term, slightly up. Long term, down. It still gives you the same idea as if you looked at it over a 10-week period. But now it might be a little bit easier on the eye for you. So one way to consider when you're looking at trend is to understand how long do you hold on to a trade for? How long do you hold on to a trade for? Usually my trades are a couple of days, at the most a week, at the very, very most a couple of weeks. So with that idea that my trades are usually a couple of days, I'm not so concerned about what happens more than 10 weeks before, because that's a lot of information that would have happened. 10 weeks is a lot of days that could have happened. I'm more concerned about identifying targets over the next couple of days or even a week. Even if you do hold on to trades for a week, having 5 weeks worth of previous information is going to give you a good foundation of what could happen moving further forward. I hope that makes sense to you. At this point on the H4 time frame, the Aussie US, looking at this, you can also identify what is the short-term move. Short-term move might be slightly up, but mostly it is a big downward move. Medium term is also that big downward move. Long term actually might look like an across. It's gone from this point, gone all the way up and came all the way back down again. So it's actually moved all the way up, ranging between 7405 to about 6952. So you can see that what the trends you're more keen on looking at. More the short, medium term, slight upward move major downward move, it tells you more about where the market could be heading, where the trend could be heading. With that, one thing you want to do is to practice. Especially if you're new to trading, practice looking at the charts, practice identifying what are short-term, medium-term, long-term trends. Ask questions if you do need help, and start putting in either your moving average lines, start identifying higher highs and higher lows, or start drawing trend lines to tell you where the market looks like it's heading. It really takes effort to identify trends. You will get it right sometimes, you will get it wrong sometimes, but through that practice, you will start getting more familiar and being able to identify trends a lot better. With trends is important, and it's one of the cornerstones of trading, is because it tells you the next part of chart patterns, where it's going to reverse, where it's going to continue, and what could happen into the slightly future of price action. With that said, we're going to take a quick 5-minute break, and we'll get back into chart patterns.